What if I told you the next tech revolution is already here and it's happening inside virtual worlds? Imagine being able to touch and feel objects in virtual reality, control your car dashboard with just a swipe, or step into a metaverse where the boundaries between gaming and reality disappear. Now imagine turning that into profits with stocks like Immersion Corporation, IMMR, targeting a 135% upside as this tech boom explodes.
We're living in the early stages of Tech Boom 2.0, an era driven by haptics, immersive gaming, and VR AR experiences. The global gaming industry is already worth $300 billion, bigger than Hollywood and the music industry combined. And the VR AR market is set to hit $160 billion by 2028, more than quadrupling in size.
The companies driving this transformation, think Meta, Sony, and Microsoft, are building the hardware and platforms. But behind the scenes, it's companies like Immersion Corporation that make it real. Immersion's patented haptic feedback technology creates the touch sensations in gaming controllers, VR gloves, and even automotive dashboards, putting it at the center of the immersive tech revolution.
And that's why we're hosting today's episode from the heart of Silicon Valley outside the Meta headquarters in Menlo Park, California. Surrounded by startup incubators and tech giants, this is where the metaverse race is being won and where companies like Immersion Corporation are proving that the real money is in the tech behind the experience.
Step inside Meta's campus, and you'll see developers wearing VR headsets, testing new ways to create virtual offices, gaming worlds, and social platforms. The energy here feels like the early days of the internet boom, a mix of excitement and urgency. Investors know this isn't just hype. It's a gold rush for the tools that make these experiences possible.
And that brings us to Immersion Corporation, a company that's already supplying haptic feedback solutions to PlayStation, Xbox, and automakers like Tesla and BMW. With a stock price of $7.44 and a target of $17.50, it's projecting a 135% upside, all driven by royalty income and scalable licensing deals.
What makes Immersion so profitable? It doesn't just sell hardware. It licenses its patented technology to major manufacturers, turning every controller sold or dashboard installed into recurring revenue. That's why its profit margins are over 90%, and it's been able to generate positive cash flow without needing heavy R&D costs.
And with the VR and AR markets booming, Immersion isn't stopping at gaming. It's expanding into medical devices, training simulators, and even remote robotics, where haptics are used to control tools remotely. This isn't just about fun and games. It's about healthcare, education, and even defense applications.
Let's not forget the NFT and metaverse boom, a space expected to hit $800 billion by 2030. Immersion's tech is key to creating realistic virtual experiences, from touch-enabled gaming assets to virtual storefronts where users can feel textures before they buy products. Imagine investing in this foundation technology before the next wave of adoption hits.
In today's episode, we'll explore how haptic technology is changing gaming, automotive design, and VR training tools. We'll break down Immersion Corporation's financials, look at its strategies for licensing growth, and share investment plans to maximize profits, whether you're a long-term investor or a short-term trader.
And if you've ever wondered how to build a business in this space, we'll share case studies and startup ideas inspired by Immersion's success. From AI-driven VR platforms to touch-enabled NFTs, there's no shortage of ways to profit in this tech explosion.
Stick around because by the end of this episode, you'll have a blueprint for making money in the Tech Boom 2.0, whether you're buying stocks, launching a startup, or simply looking for high-growth opportunities.
We're standing at the edge of a tech transformation. The VR and AR market is projected to hit $160 billion by 2028, growing at a 25% annual rate. At the same time, the gaming industry has already crossed $300 billion, making it larger than movies and music combined. This is more than growth. It's a paradigm shift. And companies like Immersion Corporation are at the center of it all.
Let's talk about gaming first. With 3.2 billion gamers worldwide, the industry isn't slowing down. Games like Fortnite, Call of Duty, and Roblox have shown how immersive experiences create billion-dollar platforms. And what drives immersion? Haptic feedback, the ability to feel every hit, vibration, and action through controllers and wearables.
It's not just about playing games anymore, it's about experiencing them. The rise of VR headsets like Meta Quest 3, Sony's PSVR 2, and Apple Vision Pro is opening doors to virtual worlds that feel real. These platforms are pushing demand for haptic-enabled devices, and Immersion Corporation supplies the core technology powering them.
But this isn't limited to gaming. Virtual training simulators are revolutionizing healthcare and military training. Imagine surgeons practicing complex surgeries or pilots running flight simulations, all using haptic feedback to mimic real world conditions. And it's not just theory. Defense spending on VR and simulation tech is projected to grow 12% annually through 2030.
Let's talk about NFTs and the metaverse, a market expected to hit $800 billion by 2030. Brands like Nike and Gucci are already selling virtual shoes and clothing, while real estate developers are building virtual malls and cities. Haptic technology will make these experiences interactive, letting users feel virtual textures and creating next-level engagement. Companies like Immersion are already positioned to supply the haptic tools needed to power this vision.
And the growth doesn't stop there. The automotive industry is transforming too. Touchscreens are replacing buttons, and haptic interfaces are making dashboards safer and more responsive. Imagine controlling your car's features with a swipe or tap, feeling vibrations when your hand hits the right button. With contracts in place with Tesla and BMW, Immersion is already supplying these automotive haptics, creating multiple revenue streams beyond gaming.
And here's something investors should watch closely: remote robotics and telemedicine. As industries move toward automation, robots will need haptic controls to handle delicate tasks, from remote surgery to underwater repairs. This creates a new wave of demand for technologies like those developed by Immersion Corporation.
The takeaway? Whether it's gaming, automotive dashboards, training simulators, or the metaverse, Immersion Corporation is positioned across high-growth verticals. It's tapping into markets expected to grow 10x faster than the broader economy, making it a stock to watch closely as this tech boom accelerates.
But let's not forget the bigger picture. The global AI revolution is fueling this growth. AI algorithms are enabling real-time feedback systems, predictive analytics, and personalized interactions, making haptics even smarter and more responsive. That's why companies investing in AI-driven tools like Immersion are expected to outperform traditional tech stocks.
The numbers prove it. Tech stocks tied to AI and VR/AR growth have outperformed the S&P 500 by 60% over the last 2 years. And analysts expect this momentum to continue, with AI-focused firms delivering compound annual growth rates above 20% through 2030.
So what's the bottom line? Tech Boom 2.0 isn't a future prediction. It's already here. Companies enabling immersive tech, from gaming controllers to virtual training simulators, are positioned to lead the charge. And for investors, Immersion Corporation offers a rare chance to profit from multiple industries at once.
In the next segment, we'll break down Immersion Corporation's financials, contracts, and growth drivers, and explain why it offers a 135% upside with a low-risk profile. Stick around. You won't want to miss it.
Now it's time to dive into the investment opportunity at the core of this tech boom: Immersion Corporation, IMMR. This is a company with explosive growth, diversified revenue streams, and a 135% upside potential. Whether you're looking for high growth returns or dividend income, Immersion offers both.
Let's start with what they do. Immersion Corporation is a global leader in haptic feedback technology, enabling touch sensations in gaming controllers, VR gloves, car dashboards, and smart devices. Founded in 1993, it's a pioneer in making digital experiences feel real, and its patents give it a competitive edge in a market set to hit $160 billion by 2028.
So why the excitement? It's all about growth and profitability. In Q2 2025, Immersion posted $616.2 million in revenue, up 8,700% year over year, and delivered net income of $27.2 million, up 295%. That's breakout momentum backed by high margins and low cost thanks to its licensing model.
And the upside doesn't stop there. Immersion just acquired a 41.2% stake in Barnes & Noble Education, BNED, adding $602 million in revenue last quarter. This move diversifies its income beyond haptics into education platforms and digital learning tools, a market expected to grow as AI transforms classrooms and workplaces.
And let's talk valuation. Immersion stock trades at $8.95, with a target price between $18.80 and $21. That's up to 135% upside. It's also undervalued, trading at just 4.2 times earnings, compared to 15 to 20x for tech peers. With that kind of discount, investors are paying less for more growth.
What about risk? Immersion's risk-to-reward ratio is 1 to 5, meaning every $1 risk could deliver $5 in returns. That's a high-reward, low-risk setup for growth-focused investors. And with cash reserves of $147.7 million, Immersion has the flexibility to reinvest in growth, pay dividends, and fund new acquisitions.
Speaking of dividends, Immersion just announced a $0.245 per share special dividend, payable in January 2025. For investors, this isn't just a growth stock. It's also generating passive income, making it attractive for both traders and income-focused investors.
But what's driving future growth? Immersion's core haptic technology is already embedded in PlayStation controllers, Tesla dashboards, and Meta VR systems. And as AI and automation continue to grow, demand for realistic touch feedback in virtual training tools and remote robotics is expected to surge.
Take automotive as an example. Immersion supplies haptic interfaces for digital dashboards and touch controls, turning static screens into interactive displays. With deals in place with BMW and Tesla, it's locked into two high-growth markets: EVs and self-driving cars.
And it's not just cars. Gaming and VR are driving demand for haptics-enabled devices. Imagine playing a game where you can feel every explosion, or using a VR training simulator that mimics surgery with lifelike feedback. Immersion is already powering these experiences, and as VR adoption grows, so will its revenue.
The company is also tapping into the metaverse and NFT markets. Space is expected to hit $800 billion by 2030. Imagine being able to touch and feel virtual clothing, artwork, or furniture before buying them. Immersion's patents could become the standard for haptic NFTs, creating new licensing streams in this emerging space.
So what are the risks? While Immersion's growth is undeniable, it still relies heavily on licensing revenue. Losing a major client like Samsung could cause earnings swings, although its BNet acquisition is helping diversify revenue streams. Another risk: patent enforcement. While its portfolio is strong, defending patents can lead to litigation costs.
But here's the bottom line. Immersion has the financial strength, dividends, and growth drivers to keep delivering. With 135% upside, a 1 to 5 risk-to-reward ratio, and a cash-heavy balance sheet, it's positioned for explosive returns while offering stability through dividends.
In the next segment, we'll explore investment strategies from long-term investing to options trading and ETFs to help you profit from Tech Boom 2.0. Stick around, you won't want to miss it.
We've broken down Immersion Corporation's explosive growth, highlighted its 135% upside, and explored the tech boom driving demand for its products. Now, let's talk about strategies to profit. Whether you're aiming for long-term growth, short-term gains, or diversified investments to manage risk.
Let's start with the simplest approach, buy and hold investing, for investors who want to ride this wave of VR, gaming, and haptic technology. Buying IMMR at $8.95 and holding it through earnings growth and dividends could deliver triple-digit returns. With its low PE ratio and high cash reserves, this is a strong core holding for a tech-focused portfolio.
If you're looking for faster profits, consider options trading. For example, buying call options at a $10 strike price with an expiration in 6 to 12 months lets you control more shares with less upfront capital. Pair this with protective puts to limit downside risk if markets pull back.
Prefer diversification? ETFs focused on immersive tech can reduce risk while providing exposure to AI-driven growth. Consider the Global X Video Games and Esports ETF, Hero, or the Roundhill Ball Metaverse ETF Meta. Both focus on gaming, VR, and metaverse technologies.
And if you want a broader tech play, funds like the ARK Innovation ETF, ARKK, or Invesco QQQ ETF can balance exposure to emerging technologies like AI, haptics, and VR platforms. These funds complement IMMR by capturing trends in cloud computing, data analytics, and software-driven growth.
AI-powered trading tools are another strategy to consider. Platforms like TrendSpider and Trade Ideas use pattern recognition and AI forecasting models to predict price movements. Imagine setting alerts for volume spikes in IMMR or breakout patterns, automating trades to capture momentum as it builds.
And don't overlook momentum trading. With Immersion's earnings reports and dividend announcements acting as catalysts, traders can target short-term price jumps. Watching moving averages and RSI levels can help time entry and exit points for quick gains during earnings cycles.
Looking to manage risk? Pair IMMR with blue-chip dividend stocks like Apple, AAPL, or Microsoft, MSFT, both leaders in immersive tech and cloud platforms. Adding defensive positions like gold ETFs or bonds can protect your portfolio while keeping upside exposure intact.
Dollar cost averaging is another proven strategy. Buying shares of IMMR gradually over time reduces the impact of short-term volatility. With its dividends and growth outlook, this approach works well for investors planning to hold long-term while managing price swings.
For more active traders, earnings trades are a high-reward strategy. With IMMR's 8,700% revenue growth and upcoming earnings momentum, investors can buy shares or options contracts ahead of results and sell into price spikes, capitalizing on short-term moves driven by earnings beats.
Another overlooked play? Pairing IMMR with small-cap growth funds like iShares Russell 2000 Growth ETF, IWO. These funds specialize in high-growth stocks, providing upside exposure with the added liquidity of an ETF structure.
And if you want to hedge further, consider adding VR and AI ETFs to track growth in the broader market. Funds like Robo Global Robotics and Automation ETF Robo can balance your portfolio by capturing broader trends in automation and robotics, areas where haptics also play a role.
Finally, for long-term planners, building a dividend reinvestment strategy, DRIP, could compound returns over time. With IMMR's special dividend and potential for future payouts, reinvesting dividends can accelerate gains while taking advantage of growth catalysts in the haptics industry.
The bottom line, whether you're buying stocks, trading options, or diversifying with ETFs, Immersion Corporation offers a high-reward, low-risk profile for tech-focused investors. Combine strategies to scale profits, hedge risks, and maximize returns during this tech boom 2.0.
In the next segment, we'll look at case studies of successful tech investors and explore business ideas for building platforms that capitalize on the immersive tech revolution. Don't miss it. Tech booms have always created massive winners, and history shows us that those who build the tools and platforms often capture the biggest returns. Think about NVIDIA, Apple, and Sony. They didn't just ride trends, they built the infrastructure that powered them. Today, companies like Immersion Corporation are doing the same for the immersive tech revolution, and this is where the next opportunities emerge.
Let's start with NVIDIA, NVDA. It focused on graphics cards and then expanded into AI processing and gaming engines. Over 15 years, its stock climbed 13,000% by enabling technologies like VR graphics and AI computing. Immersion is following a similar path, developing core technologies that power immersive systems in gaming, automotive, and virtual reality.
Look at Sony. Sony, a leader in gaming with its PlayStation consoles. But it's the PSVR2 headset that's pushing it further into virtual reality, driving growth and creating new revenue streams. Immersion supplies the haptic feedback systems for these devices, positioning itself as a key supplier in the expanding VR market.
And then there's Meta, betting big on the metaverse with its Meta Quest 3 and Horizon Worlds. While skeptics doubted the vision, investors who bought early have seen 500% returns in 5 years. Immersion's technology is a foundation piece for making these virtual experiences feel real, giving it exposure to the fast-growing VR/AR ecosystem.
So what's the lesson here? Tech infrastructure companies like Immersion, the ones enabling innovation, often become industry leaders as demand grows, with patents protecting its haptic technology, scalable licensing deals, and expansion into automotive and education. Immersion is building the foundation for Tech Boom 2.0.
And for entrepreneurs, the rise of immersive tech opens doors to new business ideas, from AI-driven VR tools to virtual learning platforms. Let's explore some ways to capitalize on this growth.
One idea: AI-powered VR design tools. Imagine software that allows game developers or trainers to create touch-enabled simulations without needing advanced coding skills. With companies investing billions in virtual worlds, tools like these could capture high-value clients.
Another opportunity, VR therapy platforms. Imagine using haptic gloves for physical therapy or rehabilitation programs. Patients could recover at home while doctors monitor progress remotely. As healthcare technology expands, businesses offering remote care solutions will grow.
How about education-focused VR systems? Immersion's investment in Barnes& Noble Education proves there's a market for virtual learning platforms. Entrepreneurs could create tools for STEM education, job training, and skill development programs using haptics and VR simulations.
And let's not forget retail and NFTs. Virtual malls are becoming a reality, and businesses offering touch-enabled shopping experiences could stand out. Imagine trying on virtual clothes or testing virtual furniture using haptic feedback. Companies creating these platforms will shape the future of e-commerce.
Another idea: remote robotics systems. Companies can build haptic-controlled robots for industries like surgery, manufacturing, and disaster recovery. With AI-driven controls and immersive technology, these solutions could see rapid adoption.
And if you're thinking smaller, don't ignore freelance opportunities. Creating VR training programs for industries like aviation and medicine, or launching consulting services for companies adopting immersive technologies, the demand for VR expertise is only going up.
The key takeaway? Whether you're an investor, entrepreneur, or innovator, the immersive tech revolution is creating opportunities in hardware, software, training platforms, and e-commerce tools. And with companies like Immersion Corporation leading the way, this is the time to act and profit.
In the next segment, we'll wrap up with key takeaways, risk management tips, and a final call to action for investors who want to position themselves for Tech Boom 2.0 profits. Stay tuned.
We've just explored the Tech Boom 2.0 and how Immersion Corporation stands out as a high-growth play with a 135% upside. From VR gaming to AI-powered automotive dashboards, this company is delivering the technology behind the experience and turning it into profits and dividends.
The big takeaway, immersive tech isn't just trending, it's becoming foundational. The market for haptic feedback, VR tools, and automotive interfaces is projected to reach $160 billion by 2028, and Immersion's patented technology puts it at the center of this growth.
But it's not just about growth. Immersion is profitable and cash-rich, with a 4.2 PE ratio and special dividends already being paid out. That's rare in high-growth tech stocks. making it attractive for both value investors and growth seekers.
The risk to reward ratio of 1 to 5 also means investors get $5 in potential returns for every $1 of risk, a profile that's hard to ignore. And with partnerships across gaming, automotive, and education, Immersion's diversified revenue streams reduce risk while keeping growth potential high.
And let's not forget the business opportunities we've discussed, from AI-driven VR platforms to robotics tools and virtual training systems. Whether you're an investor or an entrepreneur, this is a moment to act and profit from Tech Boom 2.0.
Before we wrap up, don't forget to subscribe on Spotify, Apple Podcasts, or follow us on Twitter for updates, alerts, and insights on the fastest growing stocks and business ideas in tech. Stay ahead of the curve and make money with us.
The information in this episode is for educational purposes only and does not constitute financial advice. Investing involves risk, including potential loss of capital. Always consult a licensed financial advisor before making investment decisions.
While we've highlighted stocks like Immersion Corporation, their performance is subject to market conditions and future earnings. Past performance does not guarantee future results.
We may hold positions in some of the stocks discussed. Transparency matters. Always verify data and align decisions with your personal risk tolerance and financial goals.
The music in this episode is licensed under standard agreements. Special thanks to Vibe Tracks for the track Crystal, available under the YouTube Audio Library license.
This episode is copyright 2024 by Finance Frontier AI. All rights reserved. Unauthorized reproduction or distribution is strictly prohibited.
Thanks for joining us today. Stay focused, stay strategic, and use tech innovation to make money. We'll see you next time.